It's about that time of day again. My name is Joseph. It's Thursday evening, June 1st. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and DAX tonight. Crude is bearish and collapsing off today's highs. So the plan is to look for a spike in channel with some traps and failures above the moving average for selling opportunities on Friday. S&P is bullish with 4, maybe 5 legs higher today, which also tells me to watch for profit taking and look for a deep pullback off the highs for the most reliable buying opportunities going into tomorrow's session. Gold is bullish and we're coming off a spike to finish the session. So the plan is to wait for a two-legged pullback off the highs for a possible retest of yesterday's high. I'm also watching for a failure on gold. I'll tell you where to look for that failure in just a few moments. The euro's bearish and trading inside a range tonight, which tells us to look for traps and failures up above those range highs for the most reliable selling opportunities going to Friday. And of course, FDAX is bullish, but look closely at the DAX tonight, and you can see this is nothing more than the first attempt to break out of the range we talked about in last night's newsletter. So we're looking for an opportunity to fade this breakout back into the range tomorrow. We are headed into non-farm Friday tomorrow morning, which means anything can happen. So we got to be ready for both directions and have a great plan of attack in tonight's newsletter. Before I jump into the charts, though, and put the plan together for tomorrow, I do want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version and all 5 markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Follow me on my many different social media channels. Lower left-hand corner, I'm always posting important charts, links, and updates throughout the day on my many different social media channels. Don't forget, grab those charts right below the video tonight. Remember that link that says click here to download today's charts? That's the one. Right, follow that link and join me on the SlideShare page, and you can download all the charts for tomorrow's session. And please, please, please don't forget to grab your free pass, right? You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass. If you're a brand new trader or if you're new here to School of Trade, right, make sure you grab that free pass and make sure you check out the frequently asked questions. Got a great who, what, where, when, and why section on the blog. And don't forget, I'm always here to answer all your questions every step of the way. Hit me up on the live support tool on the right-hand side of the website. Just a heads up, I'm working on a new psychology newsletter. Just started posting that this week. You can find more out on the top of the website there on the page that says Trader Psychology. And I'll soon have a mailing list, right, we're putting together on that as well. So look for more of that in the future. I love to hear your feedback on that too, right? Check out the new psychology posts I'm putting out shortly before my nightly newsletter each afternoon, right? Check them out. Shoot me an email. Let me know what your feedback is. How can I make them better? I always want to make sure I give you guys exactly what you need to be better traders every day and earn more every week here with me on the newsletter. Let's jump right in. Thanks for being here tonight as we wrap up this week here. Tomorrow is, again, like I said earlier, tomorrow is Non-Farm Friday. Of course, tomorrow, Non-Farm Friday, Friday, June the 2nd. We got a lot of news early overnight, but it doesn't matter. Everything's going to be posted. Everyone's focused on tomorrow's employment number. We saw a blisteringly bullish number today from the API report. The ADP report, right? We heard from the ADP this morning at 8:30 a.m. Eastern time. That's a definite leading indicator of tomorrow's employment number. So we're expecting to see a pretty good number tomorrow here in the U.S. from the employment number. But of course, the number itself doesn't matter. It's all about the reaction to the news, right? As I posted earlier on the blog today, right, talking about trader psychology. Talked about this earlier on the blog this afternoon. We're not trying to predict the future here, right? We're going to wait for this news to come out, figure out what the market does with it, and then we'll take the information and run from there. So all eyes and ears are posted, are positioned here to tomorrow morning's employment number, the non-farm number at 8:30 a.m. Eastern time. What you want to be careful of is the overnight session tonight. Overnight ahead of non-farm payrolls tends to be a pretty low volume and really unpredictable time of the month. So the few hours heading into this employment number tomorrow morning, be careful leading up to it. Volume should be relatively low as we go into the number tomorrow morning at 8:30 a.m. And then really, after the news comes out tomorrow, you can really expect to see one of two scenarios. Either the market will first be extremely fast, or it'll be extremely slow. We usually get one of two scenarios on Non-Farm Friday. Now, first of all, most analysts have already anticipated what this number is going to be, right? And they've already passed those numbers down to their traders. In other words, the market most likely is already priced in what they're expecting for tomorrow's number. So if the number comes out tomorrow morning as expected, it will typically react with a very slow reaction, right? Market's already priced in the news. There won't be too dramatic, right, of a reaction. If we see the news come out tomorrow within expectations, and you can follow that link here on Econo Day or go to any major news website today, and you'll find the expectations for the numbers that are anticipated for tomorrow's number. If we come out within those expectations, the market will typically kind of slosh around a little bit and then find its direction 5, 10, maybe 15 minutes later. So it may be pretty slow tomorrow after the news comes out, but give it some time, right? It'll find its way, and then we'll find its new direction, and we'll follow that new direction. Now, remember, that's if the news comes out tomorrow within expectations. If the news comes out tomorrow outside of expectations, right, smart traders are prepared for anything tomorrow. If the number comes out outside of expectations, then a lot of longer-term traders, professional money managers, people who can't afford really to get completely flat ahead of these news events, they'll have plan A, B, and C for tomorrow. And depending on whether it comes above or below the expectations, the market will move quickly after that news comes out. So 2 scenarios for tomorrow. If the market, if the news comes out tomorrow morning within expectations, it'll usually move pretty slowly, right? Because the market's already priced this news in. Give it 10, maybe 15 minutes, we'll find some direction, and then we'll go from there. But watch out if the news comes out either above or below, right? Plan A, B, or C, above, within, or below expectations for tomorrow. Because when that happens, the market typically moves in a pretty violent, erratic behavior. Again, give it 10, maybe 15 minutes after the news comes out. So no matter what happens here tomorrow at 8:30 a.m., what's your job? Sit on hand, stay patient around the news, beware ahead of the news because it should be real low volume, right? It shouldn't be moving around very well before the news because nobody wants to get caught on the wrong side of that employment number. And then watch and see how the market reacts. It'll either be real fast or real slow tomorrow immediately after the news comes out. If it's real fast or it's real slow, wait for it to either calm down or build up some direction, and we'll go from there, right? So don't forget that about tomorrow, right? Give it some time after that news comes out. There are so many great times every week to be making your money in these markets. You don't need to do it right on top of the biggest news of the month. And this really is, right? This is really some of the biggest news we get all month, right? Is that the first Friday of every 1 month is that non-farm Friday. Don't forget, we talk about all of the economic news, all the calendar, right? How to trade this news. We talk about all this stuff inside of our beginner classes here at School of Trade, right? So don't hesitate to go to the website and get started. Let's jump right in. We got a lot to cover here tonight. We got crude, S&P, gold, euro, and that FDAX will finish up here as we finish up a Thursday evening. Crude is bearish after collapsing off today's high with a strong spike lower, telling us to look for a possible spike in channel, spike in wedge, spike in range, a possible flag pattern tomorrow, and more specifically, right, whatever we do get tomorrow, this market is very low. In fact, this market right now is almost the polar opposite of what we're going to talk about on the S&P in a moment. So what we're going to talk about on the crude oil is pretty much the flip, right, of the S&P. Crude is pounding lower, meanwhile the S&P is pounding higher. So no matter what really happens here tomorrow, we're very low right now, and we're looking for traps, we're looking for failures. We'd like to get back above that moving average, maybe a 2-legged correction, right, and sell high tomorrow. Sellers are most likely hunting for yesterday's low, but we'll also keep an eye on a measured move, right, that may develop as well. Obviously, the most important thing here, right, we can see here is this big monstrous collapse here after who knows what, right? It doesn't really matter. The bottom line is inventories were earlier on. As we talked about in last night's newsletter, we had that bull channel, and so if you were with me, right, if you were with us on the newsletter last night, you were ready to buy the low of that channel in a very nice retest of that high. That's, of course, where things went wrong, though, for the bulls, right? They couldn't quite get the party continuing, right? They failed, and the bottom just completely falls out of it. So the first thing that comes to mind is this spike, right? So anytime I see a spike on the chart, I immediately now go into one of these 4 scenarios, right? Spike in channel, spike in wedge, spike in range, or a spike and then into a flag, right? Not really a spike in anything, right, but a flag, right? So those are the four scenarios I immediately now start looking for. Now, how do you trade these scenarios? Pretty simple, pretty simple. Up and back down, up and back down, up and back down, up and back down. Okay, so pretty simple. Again, like I said, doesn't really matter which scenario we see tomorrow. We're probably gonna get one of them. Okay, markets don't tend to just run forever, right? They may, but they're eventually going to pull back. People will eventually take their profit, and bears will get tired of selling low. And that's what we're looking for, like I said before. As the market goes, right, as the market pounds lower here, right, here's our spike. It's a little bit early right now to think of this as a possible spike in channel. It's a little bit early here. You can tell they got the double down, the prior week low. You can tell they're definitely going to be hunting for that prior day low, which also lines up with that triple down, right? And of course, we're also watching for a measured move to develop, which will put us down around that quadruple down. That's definitely where the sellers would love to see at the end of the day tomorrow, or middle to late morning tomorrow on a Friday, right? So that's definitely looking for. We're looking to get this price up so we can sell it back down. Now, again, the opposite will be true on the S&P, so stick around for that here in a few moments. The bottom line is we don't really know how we're going to get that sell. Watch the moving average. Whenever the market gets this far away from the moving average, it'll usually snap back, right? So think of the moving average like this, and think of it now as a pendulum. And the farther we get away from that moving average, usually the more we're going to snap on the opposite side, right? So imagine that pendulum will swing, and then we'll look for that sell from there. It's tough to tell exactly where it'll be right now. So obviously traps above prior swings, right? Traps above prior swings, that's one option, most aggressive. What I'd love to see is a failure here for those buyers, right? Buyers try to buy the pullback. I don't know who'd want to buy this market right now, but I'm sure some folks will try to buy a bottom here, right? Buyer failure back above the moving average. And then if it gets a little bit crazier, again, tomorrow is NonFarm Friday. We may see what I call a two-legged pullback, right? Which usually involves some sort of trend line here, right? Involves some sort of trend line there. And of course, that will be another chance to sell high tomorrow, right? A little bit of resistance coming down here overhead. That'd be great to incorporate along with it. We'll use the moving average along with it. The midline of this channel will be useful here tomorrow as well. And again, that prior swing. So moral of the story is very, very strong move down. Want to see this price up and back down, right? Two-legged correction and back down, right? We'll wait and see what we get tomorrow. Really, if it keeps bleeding lower, right? This may happen. This market may open up in Asia, and this thing may keep bleeding lower here. If it keeps bleeding lower without giving us some sort of correction, keep an eye out for that spike in range. This happens a lot when the market just kind of sinks like a rock up and then back down, right? Sell it on the way back down again. So it's pretty simple. I know I'm looking for some targets here after that correction. Once we have that correction, we'll know more about targets, right? And if I had to guess right now, I'd say measured move, right? Strong move down to like a correction, measured move. But again, it's difficult because we got big news tomorrow morning at 8:30 a.m. that could really shake this market up in one way or the other. How would this market turn bullish? We got to talk about that. Tomorrow's NonFarm Friday. How would this market turn bullish? Well, first of all, strength, right? Real strong move up, hold that pullback and go. So it's going to require strength from the buyers to get above the moving average. And then, of course, all the sellers are waiting for those buyers to fail to sell it back down, right? All those sellers are waiting for the buyers to fail to go back down. And if the buyers can hold it, hey, I'll gladly be a buyer. I don't care what direction I trade, right? A chart is a chart is a chart, right? I don't even care it's crude oil. It could be any market. It doesn't matter, right? All I know right now is the bears have control, right? Their objective is to retest yesterday's low, right? Because whenever we fail off today's high, you'll always be going back to yesterday's low, which is down at 47.73. The problem is we're just so low right now. I don't want to sell here. So you're waiting for that price to go up so we can sell it back down. If the buyers hold it though, fine by me, right? Their objective will be to retest the high, but you want to make sure you see that strong move up, hold that pullback, and then typically when the market turns directions like this, it'll be a little bit overbought, right? Because it'll be so bullish because sellers be getting out of the way. That's when you want to look for that two-legged pullback, right? And that's usually going to be the most reliable trade from there whenever we turn directions. So we'll talk more about that obviously with our clients tomorrow, but now you guys have a good plan right here on crude oil. Now, if you look up the definition of an irrational market, or depends on your personal opinion, right? A rigged market, maybe, right? You might be seeing the S&P in the dictionary here, right? The S&P is bullish and trading at the high of its range after 4, maybe 5 legs higher today. Is that a quintuple? That is a quintuple up at 24.30 half. I wouldn't believe it unless I saw it with my own 2 eyes here. So obviously 4 legs, 5 legs higher today. Before the news, be careful directly after the news. Follow the plan, right? And don't forget, guys, I always appreciate your time. If you want to learn more about how we trade here, if you want to learn more of the basics of our trading strategy here at School of Trade, don't forget to go to schooloftrade.com and join that free trial. If you're watching the video right now on our YouTube channel, there's a link in the description of that YouTube video. Follow that link, go to the blog or on the website of School of Trade, join the free trial, learn more about what it means to be a student here at School of Trade, learn more about our strategy, and learn more about our beginner, intermediate, and advanced levels of membership. Guys and gals, don't forget, I'm always here to answer your questions. Hit me up on live support on the right-hand side of the website, or always feel free to give us a ring here in the office at our corporate headquarters in Los Angeles. What a great week we've had. Boston Open, a brand new month of June. Had a great month of May, but it's time to make some hay, right, as we go into the summertime months. I'm looking forward to another great day with you guys tomorrow. If I don't see you guys in the trade room, I'll see you back here same time, same place on Monday evening. There's no newsletter on Friday afternoons. You guys have a great weekend out there. If I don't see you guys in the trade room, I'll see you next time on the nightly newsletter. Adios, amigos. Bye-bye for now.